Yeah, I mean, I think right now what I'm really focused on is the consumer. Even those retail sales numbers came in a little bit higher than expected. I think there's actually signs of softness in the consumer. We've been watching, for example, auto profits and the motor vehicle companies for the whole year. Those have been soft, and as you know, recently we've seen some sales figures that have shown quite stark downturns, sometimes down 30% year on year, and I don't think those numbers are in the consumer data yet. We're also seeing some, or not seeing, we heard reports about Golden Week spending, the tourism spending during the national week-long holiday. Growth seems to be down about 3 percentage points from last year, so it's 12 last year and it's 9 this year. And these two categories, spending on automobiles and spending on tourism, seem to me to be the kind of discretionary spending that would normally get cut if consumers are starting to feel squeezed a little bit.
Cliff, let me ask you about the big fear the markets have about whether we crack that 7 handle on the currency. What impact does it have? Because clearly it would be supportive for the manufacturers, but it might have that confidence impact on many across the investing community. So what do you make of this 7 handle and whether we cross it anytime soon?
I think the 7 handle by now is actually a little bit artificial. I mean, I think it's much more important as far as looking at the currency's impact on the economy to look at the trade-weighted currency, which has fallen, but is not at levels that I would think is likely to spark a lot of panic. I mean, the 7 handle seems to be artificial, a government target more or less, and I think the main reason that they're focused on it is because that's above the low for the currency that we hit, meaning the peak for dollar CNY, China, back in 2016. And the government's trying to keep that level below that peak. But I think it's rather artificial.
Then give us a sense of how the stock market is likely to perform into year-end, because we have seen some lows on the Shanghai Composite, on the Shenzhen, and today we've had comments that there would be a backstop, more liquidity that would stand ready from the authorities if there should be an issue with some of the securities. So given all the support that the system is providing, shouldn't there be a bit in the markets at some point for these beaten up stocks in China?
Yeah, that's a very good point. I mean, you know, the way I look at it is that authorities are saying that it's all about sentiment and liquidity. And if that's all that was, they should be able to bring a bottom to this market. But, you know, but what if the stock market in China, like stock markets elsewhere, is actually telling us something about the real economy that we haven't thought about? That's my concern right now.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.